So with plenty of headline making events and a little bit of extra time on everybody's hands, there are lots of narratives floating around about what lies ahead. This week we discuss the danger of falling in love with a narrative. So narratives can be a very powerful thing. They can lead us to do heroic things. They can help us do the right thing, and they can obviously take us down destructive paths as well. It's really the latter that's been my concern as I've watched investors, markets just move in utterly manic ways, not only during the onslaught that was the most of March, but just the panic-stricken fears during those March 23rd lows to the now seemingly inexplicable bullish highs that we've seen here to close out April. A few things I just want to remind you all about, which is for us all to really take a breath right now, step back, and reflect on what's happened. And hopefully, more than anything, whether you tend to be more bearish or more bullish, really reflect on how quick markets can change. And a few just truths, one of which is markets just don't move how you think or anyone thinks they should move. I talked to plenty of people in those mid-March days who just made all the sense in the world, and they did. You know, that, hey, this isn't going to get better anytime soon. You know, the death count's rising, the COVID count's rising, the lockdown's being extended, the market just keeps plummeting. I can't possibly see how this is going to get better. That was completely logical, completely rational, but as it all turned out, completely wrong. The March 23rd, as you're down high single digits and the lockdowns we're being told are going to be extended, turned out for the time being to be a low, and the market rocketed higher. It caught everybody off guard. Conversely, now the narrative seems to be, well, the market has bottomed. It couldn't possibly go lower. Things are going to reopen. The economy will go back to normal. And that seems pretty logical. I would caution you that very well may not be the case either, particularly when you look at the real data of the situation, whether that's a durable goods order that was down 15% for its lowest drop in years, unemployment, which is now over 30 million Americans, much of which is going to become structural over the intermediate term, meaning it's not going away soon. You've got consumer confidence, which dropped 40 points, its worst reading in almost 47 years. Spending, which dropped 7.5%. And that data doesn't even take into account that we haven't been shut down that long, or that some of those periods that it's reflecting didn't even reflect a period where things were shut down. So now is the time for continued caution, but even more continued process. Again, not letting our emotions, our feelings, and what we believe to be logical guide our ability or attempts to predict market movements. I know for a lot of people, again, they're now putting their trust in the Fed. To that degree, central bank intervention isn't anything new. It certainly helps, like I have been saying, take some of the worst case scenarios likely off the table. But by the same token, let's not forget the 08-09 timeframe, post-Fed cuts, TARP, that we still had another leg down before we found those true lows. Or if you go look at the Shanghai index, Chinese stock index, which I included in this week's commentary, it'll show you it's living out the more classic bear market recovery, which is drop, move to a new all-time high, second drop, slow recovery. That's typically how these things go. Market doesn't have to do anything it doesn't want to do. But again, just as we tried to caution so many of you to not give up during those dark days of March, we would caution you not to get too greedy. I'm a little bit discouraged by the data that's coming out that shows how many advisors capitulated and sold off and provided no real value to their clients in March. And now conversely, apparently record numbers of new investment accounts being opened up with online brokerage retails as people try to day trade this bounce. All of that is the antithesis of what we want to be about, which is balanced emotion, balanced process. I know for some of you, as I go through that data, your temptation then is to say, yeah, but Tim, I think you're saying things are going to sell off, that there's this bad market data, and you try to front run and market time my comments about not front running and not market timing. Remember this too, the market, as I just said, doesn't have to do anything, and corrections can happen both in terms of price, things dropping, and time, meaning they just stay range bound for a very long period of time. And you don't want to get caught offside. So again, be balanced, be diversified. Last point, don't myopically focus on the S&P 500. There's a lot of great opportunities that come with far less risk over the intermediate term than just stocks. Looking at a lot of different parts of the municipal bond market, even some parts of the high yield and credit market, the real estate market, where you can still get things that are trading well off their highs, give you great income stream that you can put in your pocket today, and at the same time, not have some of those downside risks, particularly given that's the one area to date the Fed is buying to really put a floor underneath a lot of those markets. We're gonna leave it right there. But again, remember, patience, not taking action sometimes is the best actions. Our emotions tell us to move when history suggests the right course of action more times than not is to stay pat, that is the plan, the process, and the path to success. Finishing up on a personal note, I wanted to thank all of you for your just tremendous support to me and my family over the last few weeks. I've had a lot of people who connected to us on Facebook or have reached out after the video where I alluded to some things were going tough, but right around that March 23rd low in the market, we were going through some of our own personal lows. Rach had almost lost the pregnancy. We found out that Ellie had Down syndrome. There were a lot of heart and lung issues and scares, and the outpouring of support and love for those of you who did know some of that was just amazing. We're doing well. We're holding up. Ellie was born last Wednesday, 6 pounds, 12 ounces. She's in seemingly great shape, other than a gap between her esophagus and her stomach, which are going to require a few months in the NICU. But we just wanted to thank you as a family, including all the little gifts that have shown up for my girls, dinners to help support my wife and I, just encouraging notes and messages. It really has been overwhelming. We knew we had a special community that we've built up here at 10 Capital and with so many of you over the last few years, but we've nonetheless been just blown away by everybody's support, understanding, love, prayers. We'd ask for a little bit of continuation of that as Ellie continues to heal, but we just wanted to thank you so much and let you know how much we love you and appreciate you as well. With that, have a wonderful weekend, and we look forward to seeing you soon.